unicorns are beyond endangered, right? They're very elusive as a species. So sort of this the Ark of Noah or sort of something. They actually don't exist. But more precisely, it's a very arbitrary sort of definition, which is self-imposed in some ways, and people have been pursuing in part for evil reasons. But we think of it as an outcome of really what we're doing, which is solving problems that are worthwhile, that are worth solving. And I think of valuations. In fact, I think of earnings, and on the back of which valuations is an output of doing something that is really useful, and according that people are willing to pay for. So we've been focused on that part, and with an element of conviction that valuations will fall.
Welcome to Nothing Ventured, Nothing Gained, a podcast by SC Ventures, the venture, fintech investment, and innovation arm of Standard Chartered Bank. Through this podcast, we look to explore all things fintech, innovation, corporate venture building, partnerships, and emerging technologies. I'm your host, Apurv Suri, leading client engagement at SC Ventures, and I'm joined by Harald Eltvedt, who leads our venture and incubation arm. In this episode, we talk to Alex Manson about our clients as a source of inspiration as we look to rewire the DNA in banking. We also discuss the evolution of our high conviction themes, which guides what we do, as well as how we work with our clients in the context of co-creation and joint venturing. Wrapping up, we weigh the pros and cons of building within a corporate against an evolving backdrop of the VC environment and an ever-changing macroeconomic outlook.
You alluded to clients, and obviously, so it's a huge source of pipeline, I should say, of inspiration. A lot of the inspiration for ideas, ventures, projects, generally speaking, comes from clients. In fact, it all started this way when clients were asking us to do certain things, and implying there's a gap in the market, and so it's a very good way to identify gaps. But it's also a very good way to validate with somebody else that we may have a way to plug that gap. We may have a way to address a problem worth solving when someone else is willing to work on it with us. And so we've done a bit of that in the early days. De Novo comes to mind for who we built Task Connect, and obviously De Novo has been a great partner of Task Connect and of the platform for a few years now. But in the meantime, we have a number of other projects with great clients, great names, great partners. I think of them as partners more than clients at this point. The likes of NG in the energy space, where we're focusing on green transition and all things sustainable. The likes of major Swiss private bank that is Julius Baer, where we're tokenizing very different kinds of assets going forward, and et cetera, et cetera. So the type of engagement that we have with partners is a great source of intellectual challenge and commercial challenge and inspirational.
And I think going back to how we originate these venture ideas, and obviously we track everything at SC Ventures, and we track from the source of where these ideas come from. We have the entrepreneurship program. We have the fintech bridge, which is a platform where we connect with fintechs, and where we have the client origination team. But every year, just to give an idea of scale, we scan over 500 business ideas. And out of these business ideas, a handful will turn out to become ventures. And it's not because they're bad business ideas, by the way. I think some of them are very, very decent, but it's both, I think, capacity. We can't do everything. I think, does it fit our ecosystem? Does it rewire the DNA in banking? Or in your case, is it better for, a use case for some of our existing platforms, right? So I think we don't turn away all these ideas. We also convert them into a use case for our ventures.
And it's a great reflection, by the way, on an element of what it takes, but also an element of why it's so hard for an established organization to change things, to create and innovate, because you got to make the space for this. And typically when you know exactly where you're going and you're focused on what you're doing, there's no time. There are these 500 conversations, because the conversations initially can be seen as a distraction, whereas our job is actually giving space for the 500 conversations, because you never know which one of the 500 is going to yield to great ideas. In fact, a lot of them are great ideas in the first place. But then it takes more. It takes a team. It takes people. It takes all that. So creating the mind space for it, creating the physical space for it, is a key part of the job. Be it with entrepreneurs, which is a critical piece of culture and mindset, which we've been pushing from very day one, and remains an integral part of essentially what we do. To partners and clients, to fintechs and startups and other partners we interact with, creating the space for these conversations is absolutely critical and essentially part of the method, an integral part of this.
Yeah, absolutely. I mean, I think there's also an element of how we align with clients with regards to the themes that we're working on, but there's also an element of culture. Speaking from the same playbook, so to speak. At times, we've had success. Let's say Lenovo is speaking to the treasury side of the organization, but typically from our observations, it's a question of, do you have the mindset? And do you have, to your point, the capacity to go out and do something different, which at times some clients do, and at times you have to convince them, and at times they already have an established practice, and that comes back to NG and some of the other organizations that we're working with. So I want to come back to the themes, since we haven't spoken about it. We have had 6 themes, now we have 4, and maybe, something else in the future, but it would be good to get your views on why we went around the themes that we did, and where do you see them changing in the future, if at all?
Sure. So you're right. You alluded to the fact that the themes have been a little fluid. Frankly, they haven't changed that much, but we consolidated some of the themes together, and so for ease of explanation. But there's an element of fluidity, meaning we shouldn't be wedded to anything. So the only thing we're wedded to is doing what societies and clients expect and serving them in the right way. And so if we're going to rewire the DNA banking, it implies doing exactly that and adjusting our themes if that's what clients want ultimately. So we started. I guess we started with client themes, and I'd say on the retail side, on the corporate side, on the retail side, we started with digital banking and lifestyle, and we are absolutely still focused on it, which is the conviction that people really don't want to talk to a bank; they want to talk to a banker as much as they want to go and see a dentist, which is in my case certainly not very much. Although dentist is quite nice, but that's kind of another point. People want to do things, have lives, and in the course of their lives, they do things. And that requires transacting, getting financing, making payments, and all this. And so integrating financial services with people's lifestyles is critical. So it's about lifestyle apps, but it's about the online economy as well, serving the online economy in a way that financial services have not very well in the past. And so digital banks, but also embedded finance, banking as a service, and wealth as a service are all part of that theme. And then moving to the corporate side, it was our minds about supply chains, SMEs, right? The forgotten middle that isn't banked very well by anyone. Yet it's typically more than half of the GDP of any of the markets we're involved in, right? So supply chains, cross-border trade, domestic trade, trade financing, and all that. And we built a number of ventures in that space. So there were the 2 client themes. Across the board, 2 predictions, and then the 2 additional themes, right? One of them is infrastructure will evolve. Infrastructure of the future is not what it was, and actually not what it is today. We will all converge towards digital assets. Digital assets as an infrastructure and as an asset class is here to stay. However, it takes operating it at bank grade, institutional grade, as we call it. And so we set out to essentially build bits and pieces of digital assets at institutional grade, beginning with custody and then moving on to brokerage and tokenization and a number of other things which we're working on at the moment. And then the fourth, and certainly not least, is ESG, broadly speaking. And you could argue if you think of ESG broadly, that 90+% of what we do is somehow ESG related. Certainly, when you think of it as financial inclusion, a lot of what we do has something to do with financial inclusion. But we also have a number of ventures and venture projects specifically dedicated to the green transition and coming up with viable commercial business models to enable to effect green transition, which is a very exciting theme in my mind, certainly in the coming years.
Well, it's specifically exciting for me too, as I'm I'm overseeing a few of these ventures in that space. But out of
Very
all
exciting.
the things, yeah, I'm quite excited. Also hopeful that they pick up in the future. I mean, we're in the venture business.
This is one thing to talk about and one thing to say is very important. It's another thing to come up with ventures that will have commercial staying power. And specifically, I focus on that theme.
Yeah.
I think there's a lot of money has gone to green investments and green financing, less so to green tech, in my mind, or green fintech, and that there's a dearth of intellectual horsepower in my mind that dedicated to that political space, and so uniform.
On all the themes that we mentioned over the course of the close to 6 years now. We now have a portfolio of 36 ventures. That portfolio is a dynamic portfolio, by the way, because we have 12 that are commercially live. We have 20 plus that are incubating or accelerating, but it doesn't mean that, unfortunately, all of them will make it to the commercial part. But it shows the activity that we have. We have 36 ventures in our portfolio, 25 portfolio. Do you think we're now in a position that the market is looking for us? How do we attract more investors, more partners, more clients? Do you think we're there? What's your view on that?
Right, I'm not sure what it means to be there, or in many ways it's we're never there because we embarked on a really long journey in enterprise. I would also say that it's not we, the platform, in so many ways, it's the ventures. Right? We want the ventures to stand on their own 2 feet, as you say, meaning validate themselves commercially with clients, financially with investors. And so, to your point about attracting investors, really the ventures have been raising funds from almost from the beginning. And they're still doing it, and they will continue to do this. And I expect more of it to happen this year with some of the better ventures that we have built and are in the market. And so every fundraise is a bit of a test, and we want every single one of our babies to grow and mature and to be there, as you say, establish that credibility. Commercially, internationally, so that is an ongoing process.
Yeah, and I think on the business of building ventures within a big corporate, people could argue, and especially external investors, external VCs could argue that we're slower and we're not building unicorns. By the way, I was just reading an article in The Economist that actually unicorns are an endangered species these days because we're no longer looking for growth, but actually looking for a path to profitability, more compliant, more reliable business models. And I think that's what we focus on, actually.
Yeah, unicorns are beyond endangered, right? They're very elusive as a species. It's sort of missed the Arch of Noah or something. They actually don't exist. But more precisely, it's a very arbitrary sort of definition, which is self-imposed in some ways, and people have been pursuing in part for evil reasons. But we think of it as an outcome of really what we're doing, which is solving problems that are worthwhile, that are worth solving. And I think of valuations. In fact, I think of earnings, and on the back of which valuations is an output of doing something that is really useful and according that people are willing to pay for. So we've been focused on that part, and with an element of conviction that valuations will fall. And we've done okay from as an investor, from a portfolio perspective. I would say we've achieved so far VC-like returns given VC-type risks. We're running with a capital that we're a part of. So this is what shareholders expect, and every single venture will have to do that in its own world, in its own right as well. So is it difficult these days? Yes. Are unicorns few and far between? Yes. But do we have the conviction that we are building very good companies because they're pretty good at solving problems that are worth solving? Yes, absolutely. And having the staying power and the conviction to stay the course on this is, I think, going to be conducive to success. To your point about being a little slower than others and a little different than typical VC-led companies, I think this, one is true, and don't apologize for that. We build things at institution grade. We build things that will, we think, engender more trust because they're built resilient on day one. And so we'll slow things down a bit versus the proverbial garage where founders sort of make it up as they go, and it goes very, very fast until at some point they have actually to do all the things right, which we impose on a venture anyways. And so there's an element of not shying away from the fact that our DNA is to operate with the mindset and of a regulated environment, and that operating with a regulated environment DNA is not something you can make up as you go, and I do think a lot of fintechs, a lot of tech companies, in fact, don't really know what they don't know when it comes to financial services and the regulated space, and the fact that we slow things down a bit at the beginning in order to get them right and generate ventures that will, as I said, arguably more trustworthy and that people, clients will be willing to differentiate is worth doing. So a little slower, yes, not that much slower, by the way, and arguably right from the start.
Well, thanks a lot, Alex. I think, there's a lot more things that we could talk about when it comes to SC Ventures. We'll be back. We'll be back. This is the first of many more. By the way, Nothing Venture, Nothing Gain is not just the title of our podcast. It's also the title of our new book, right? Which you just announced.
Are on our website.
It's on our website, and we'll release more of those along the year as we release more of these podcasts as well. Thank you very much, Alex.
Thank you, Alex. Thank you both.
Yeah, and very excited. If you want to know more about us, go on our website, scventures.io. You can connect with us on LinkedIn as well. Until the next time, thank you very much.
Thank you. Thank you all.